Hello guys, I hope you had a beautiful week and that you're back testing this weekend and practicing for the next week. Okay, so today I'd like us to talk about how I took this trade that is currently running at 1 is to 100, 1 is to 155, 150 something currently. But we're aiming for 1 is to 176 risk to reward ratio. So I hope you enjoyed this video and leave a like if you like it. So I'm gonna first talk about basic QML. So what is QML? QML is Quasimodo level. So when the market is in an uptrend and then it breaks a downtrend, the uptrend, the structure, you expect it to go back. It breaks this structure. You expect it to react to this level and then go down. So this is a reversal QML. So how did we take advantage of this first? But to me this means nothing unless there is something happening over here. It has to be above the QM level. I look for something above here. So most people take this zone, but this is a huge risk to me. This will be like 22 pips in a real market situation. So how do I approach this? So I look for my supply levels when I'm looking for sales, and demand fresh levels when I'm looking for buys. When you flip this, it will be the QML for a buy. So how, if there's nothing here, I won't take this because QML is nothing. QML means nothing to me. It just means a reversal is about to happen. So I take advantage of that and find if there's anything that the market should react to here. I'll just talk about the basic. I look for the MPL. This is the maximum pain level. That's what we call it, or I call it. I look for decision point. And what else do I look? And I look for significant support and resistance. These are the three things I look for here. But I'm not gonna go into it. I'm just gonna talk about the trade. So what do we see here? I like to start from the 4-hour. So the market started being in an uptrend, so it was uptrend and then it came here. There was nothing important in the 4-hour. You look in the 1 hour. So in the 1 hour here, the market is in uptrend, higher highs, higher lows. Then it came and broke this structure. When it broke this structure, so my QM level is on this high. As I said, most people will take the sell from here and put the stop loss up here, which is okay. But for me, this is too much risk. This is 15 pips. So what do? I go down to the lower time frames. to see what is happening. So when you go into the lower time frame, you can find that higher highs, higher lows, higher highs, higher lows. So here there's also a structure broken. So this is your general area. So I'll just put it here, and I continue going further down to look for a fresh level. So here there's already the supply. I look for 5 candlestick patterns to define my supply and demand zones. So this is one of them. So let's see. Okay, this is the general supply. My stop loss will be on the highest wick, and then that will define where I will sell. And also it is okay, just a minute. So this is just refinement, just refining it. So this is a fresh zone, so we'll refine it to here then. And this is how you think people SMC looks so complicated, but I've never learned SMC, but just supply and demand. SMC just basically supply and demand. It's just that they put words that confuse people. They just call it something that makes you be scared. Sorry, my English is not that good because that's not my native language. Native language is not English, so it's I might struggle looking for some words, but it's okay as long as you understand what I'm saying. Okay, so I was talking about maximum pain level, and maximum pain level is just where most rejections have happened, significant rejection. So what you can see here is you can see this support. You can see support. The market is generally reacting to this area. Support, another one, rejection, another rejection, another rejection. And then when it comes here to go down, it forms this we call it double maruking. What is a double marubozo? Let's say in a downtrend as we're here, I'll not change these colors to red. 2 candles form, and then they form these 2 wicks. So this is what a double marubozo, and it hides this. It's also called king, double marubozo king. So here when you go on a lower time frame, you'll see drop base drop. Yeah, so that's the nearest supply to this MPL, and that's how I refine all this to just this. So I'll just remove it as so maybe in future videos I'll explain this MPL decision points, how to find them easily, but for today it's just the basic. I've taught you the basic QML. So there's also I cannot take this trade just like that. I have to see how the market is approaching the zone. So there are 3 ways on how I look. how the market approaches the zone. The first one is a fake out, diamond, and a compression. I'll not talk about the rest, but this here, the fake out. How is the fake out? The fake out is just what the smart money concept traders are called liquidity or inducement. I saw someone calling it inducement, I don't know. So here is resistance and then resistance. This is a fake out, fakes out for people to buy at the breakout of this resistance, and also it had a support, so support becomes resistance, rejects again just a little bit where people think it will go, it will reverse from here, so it takes them out by taking the stop loss. And you know the market it doesn't when it's aiming at you, just look at how it came here, following you that it's coming well, and then it doesn't even give you a chance to exit. This is a 30-minute candle. It moves 30 pips and takes out your stop loss, gets into our zone, and then goes down. So our zone is so this is how you snipe these trades. This is just how you snipe them trades. As I said, you have to look how the market is coming back. So you just can set limits and just wait. You can set an alert here when it comes close, so that you can see how the market has been coming back. And that's basically it. So how do we take our targets? So when you look here, there's a low, high, low, low, high, high. So this will be my target, unless it breaks it. If it breaks that, the next zone will be somewhere here. I'll take that, because here there's a SSR and then double Maru King. So this will be my next target. So I'm hoping that it will get to take profit. One pip stop loss and one is to 171.8. So that's it for today. I hope you learned something, and if you did like the video, like and subscribe to the channel. It will mean a lot to help others come across this information. Supply and demand is king. We just name it as smart money concepts. Let me stop there. We'll meet next week. Thank you.